Markets continue to gain after a flat start. Sensex trades above 72,200 while Nifty is above 21,900. Tata Motors jumps over 7% and this is on the back of strong Q3. Margins have improved, JLR order book stands pretty strong and that is what is giving it a booster. Paytm moves continue as the stock hits lower circuit for the third straight session. The company wiped out 20,485 crore rupees market cap so far. And State Bank of India reported their Q3 numbers on Saturday. The bank reported a 35% drop in profitability, however, showing an improvement on the asset quality front. The National Credit Guarantee Trustee Company has issued a forensic audit on Bandhan Bank. That's an NDTV exclusive, and we'll get you more details on it on the show. Welcome, you're watching Hot Money. I'm Hiral Dadia. Let's quickly take a look how markets are panning at this hour. Overall, you are seeing some momentum that's picking up after a flat start. If you could just have Nifty 50 on the screens and then the broader markets as well, that will give you a flavor. There you go, 0.3% higher now. We're above the 21,900 mark. In terms of Bank Nifty as well, it's going to be interesting, and the PSU space is absolutely buzzing in trade. Bank Nifty seeing marginal cuts of around 0.1%. And if you see the PSU Bank Index, which is up almost 1.3%, but if you see the PSE Index, that's the Public Sector Enterprises, that will be showing you some great returns as well. There you go, 3.5% at the day's highest levels. A lot of buzz coming in there, and all of them reacting to the kind of announcements that we've heard from the budget as well, the allocations that have gone up overall. If you see in terms of broader markets as well, the mid-cap and the small-cap index, let's pull up that on the screens and see what's happening on that front. There you go, mid-cap is up 0.7%, outperforming the benchmark indices in trade, and you have the small-cap index, which is up 0.9%. So a lot of stock-specific action that we're seeing in today's day of trade. Our guest who will be joining us in today's session is Ashish Maheshwari, Director at Arihant Capital Market, to discuss all the stocks that are on our radar. But Star Health Insurance is another stock that is in focus on the back of earnings. Profits are up around 38%, and clearly it has beat street estimates as well. My colleague Monal is in conversation with the Chief Financial Officer at Star Health, that is Mr. Nilesh Kambli. Let's hear out that conversation.
There is enough and more opportunity for growth for the segment and for the well-being of the society as a whole.
So if we had to look at your retail and group proportions, the retail segment has always been the stronger one, but we've seen a stronger growth in Q3 in the group segment as well. So what is your focus area, and are you planning to look at more group health insurance policies? Can you just give us an insight?
Yes. So when it comes to retail segment, we are around 94% of the portfolio for us is retail and 6% is group. In the group segment, we are growing very strong in the bank insurance portfolio, which is non-employer-employee segment. On the employee segment as well, employer-employee segment, we are focusing on SME business, which is profitable. So the theme for us is good, profitable business where we want to grow our business and just not bring in top line for the sake of it.
So what exactly would be your growth parameters here? I mean, what segments are you targeting? Not just in terms of retail and group. What I mean is in terms of channels, and where do you identify the next leg of growth for Star Health will come from?
See, when it comes to channels, we have agency channel, which is our biggest channel. We continue to grow in this segment. In agency channel, what we have done is we have identified certain geographies, certain categories of business which are loss-making, and we don't want to focus on those areas. But when it comes to good geographies, which means, the south of India, the east of India, we continue to grow very strong in that segment. Digital and banker, again, we are focusing a lot of attention. We have done a lot of investment, and these channels are doing really well for us. Today, 33% of our new business comes from digital and banker channels. And again, in the group segment, the SME segment is a focus area where we want to grow our business.
So that's the management of Star Finance, clearly in conversation with Monal. But moving on, let's welcome in our guest as well to discuss all the stocks that are in focus in today's session. Maheshwari, director at Arihant Capital, joins in. The stocks we are discussing today is one, Star Health, Tata Motors, UPL, Bandhan Bank, Paytm, Bharti Airtel, LIC, as well as the power PSUs that are in focus in today's day of trade. And we're just picking up a couple of flashes at the bottom of your screens, if you see, on the alcohol companies, because this is going to be an interesting space to watch out for on the back of the news that we're picking up so far. We'll come back to that one. Ashish, good morning, good afternoon, I beg your pardon, and welcome to the show. How are you viewing a Star Health Finance? Because clearly, if you go to see a good growth coming in terms of profitability, the NII has improved as well. What would you advise?
Overall, if you see how the LIC stock is performing, ultimately all these private companies, the stock will also start doing well. In fact, there was some disappointment in their September 2023 result, but I think numbers which came in December 2023, where net profit went up by from 123 to almost 290 crore, is quite promising. And whatever they have changed the premium to family health Ultima policy, which its management said last time also, result of change or increase in premium will start coming in from the next quarter onwards. So those things are happening now, and in my view, sector is at sunrise stage, healthcare sector, and this stock has not given those kind of return which other insurance companies have given. So looks good at this price point.
So that's with regards to Star Health. Moving on, you have IMFL companies that are in focus as well. And this is on the back of the news that we're picking up where Kerala has gone ahead and hiked IMFL prices. This is going to be an interesting move. And this is in the form of excise duty. The excise duty has been hiked by Kerala. Stocks like United Spirits, United Breweries, you have Tilak Nagar Industries, Radico Khethan, Globus Spirits, Som Distilleries, all of this that will be in focus as well on the back of this. Very quickly, 30 seconds, Ashish, how do you look at this? Do you think this will be a pass-through? Because excise duty has been hiked by rupees 10 per litre, and they will be able to garner around 200 odd crores, and that is what the Kerala FM has indicated so far.
So I'm sure they are going to pass through. None of these companies are going to keep this excise duty hike on liquor with them. But only thing is, like if they increase the volume, there might be, if they increase the price, there might be some issues related to the volume. But I don't think so. The impact is too much because Kerala is a typical market where the small size segment liquor is sold widely. And companies like Tilak Nagar Industries and your Radico Ketan, etc., are prominent player in that segment. But in my view, this is just a knee-jerk reaction, and the sector is slightly out of fancy. This is the reason you are witnessing this fall. But ultimately, this will be passed on to customers. So,
okay, so this is going to be a pass on as well, though there is some bit of pressure that's building in on these counters. Varun Beverages is another one that we need to address, at least right now. Overall, they've just reported numbers. Revenues at 2,668 crores. You are seeing a mild spike that's coming in there, but the stock is in the negative. 144 odd crores is the profit number versus a 81 or a 82 odd crores is what is reported. The stock is down around 0.3%, trying to recover from the day's lowest levels and come back into the green. Let's see what the margin picture looks like over here, because usually the third quarter sometimes is a slightly soft quarter in the lag end from December, Jan onwards. But overall, there is that pressure that's building, and this is a company which is highly valued as well. So that's with regards to Tata Motors, I beg your pardon, Varun Beverages. But moving on, Tata Motors reported their numbers as well. A smart move coming in on this counter. Vinay joins by to tell us more in terms of, Vinay, firstly, what is working for the company so far, and what are brokerages making out of it that the stock is up almost 7 to 8% in trade today?
Yeah, hi, Hiral. So first of all, the profit more than doubled And it was a significant beat on the consensus estimates, and that we are seeing the result is on the stock. It has risen quite significantly today. And if you look at why this optimism around the company it is because of JLR. So JLR's order book is the main reason that analysts are giving so much positive commentary for the company. If you look at the company's order book right now, it was 148K at the end of Q3. It is expected to decline. But what is interesting here is that the high margin models comprise 55 to 60% of sales and 76% of the order book. So obviously, analysts are expecting that the good revenue and performance of JLR will continue in the coming quarters, because even if the order book declines in the coming quarters, you can still have some cushion for the FY25. And as analysts have said, that the next leg of growth will be driven by JLR. You can see the Motilal Oswal has said that it expects EBIT margin to reach 9.9% by FY26, and Nomura has said that the success of JLR's EVs may drive re-rating as well.
Right. Thanks, Vinay, for getting us the details. So this is interesting one. 1100 is the target by Jefferies, 1000 by Motilal Oswal, and 1028 by Macquarie. The stock is trading at levels of around 937. Ashish, Tata Motors, already a multi-bagger in 2023, with the performance and the commentary that we've heard and the kind of order book that they have with regards to JLR. Another multi-bagger again in the making for 2024?
I agree with you. Another multi-bagger in making in 2024, and even my target for the stock will be 1200 plus, because the way other automobile companies have performed, I think still a lot is still to be captured by in that price and by Tata Motors. And the kind of numbers which they have come is phenomenal. 7,000 crore profit in for the quarter. Because you are used to see these kind of losses in particular this company for so many years, and now almost 1,10,000 crore worth of sales and 300 basis point improvement in the margins. So everything is going right in as far as Tata Motors is concerned. Even along with JLR, also their Indian markets are also picking up, and the kind of lead they have taken into EVs, etc. I think momentum will continue in the stock, and maybe in the month of February, I'm expecting it will, you will see in 4 digits.
Right, a 4-digit stock in the month of February is what Ashish is saying. Let's wait and watch. But let's quickly slip into a short break. Ashish, stay with us. We have a lot more to discuss for the benefit of the viewers. So this is NDTV Profit. back. You're watching Hot Money. Now, one stock that is under pressure in today's day of trade is UPL. It's interesting to see how, specialty chemical companies have been taking a beating. This was a quarter where managements had indicated that the revival could start, but does not seem to be the situation. Revenues are down 27%. Margins have contracted as well. Varsha, if you can highlight for us what has gone wrong. Numbers absolutely evident, but what has led to that? And secondly, what brokerages are making out of it?
So, hi Hiral. So, as you rightly said, UPL is under pressure. Now, this is on the back of weak result posted by the company. Company did post net loss of almost 1,600 crores. Now, revenue decline was led by destocking, then low channel inventory demand in North America and Europe, and also ongoing pricing pressure, especially in Brazil. Now, if you see, company is expecting the revival from Q2 FY25, and also it expects volume decline year on year, but sequentially volume to grow. Also, if you see, the brokerage's view to say Citi has a buy rating on the company, while Nuvama has a reduced rating and Hiral Bank has an accumulate rating. Now, all the three brokerages have reduced their target price. Now, this is on the back of they see near-term challenges on high inventory and declining agrochemical prices. Also, if you see, risk of credit rating downgrades and pressure on balance sheet is a concern according to these brokerages, and cash flow generation and debt repayment remains key monitorable. Also, they also see margin under pressure on weakness in key markets and inventory destocking coming in 2 to 3 quarters.
Right. Thanks, Varsha, for getting us the details. That's UPL and GHCL as well, which reported numbers. Weakness has continued on that one as well. That's UPL. If you can have a GHCL, there you go, 6% downtick. We did speak to the management there as well. Ashish, how are you looking at both these companies? And do you think this is a good opportunity to buy?
Market, if companies are coming out with poor set of numbers, investors are going to buy in Zippy. I think you can leave them alone for some time, and once there is some promising numbers or there's some revival in their demand, etc., then only you should buy. So UPL, another worrying factor is their interest cost has gone up from 871 crore to almost 1200 crore is the interest cost which has gone up. And there are some perils of being a global company, because now we are witnessing a lot of drought-like situation in South America, and the market is not picking up in North America also. So all those issues are coming in UPL. So my suggestion will be still not to buy UPL. As far as GHCL is concerned, again below their estimates are the numbers, and when numbers are going to be like this, surely we are going to get punished. So both are avoided in my view.
Avoid in terms of both these counters. Moving on, the National Credit Guarantee Trustee Company has actually issued a forensic audit on Bandhan Bank, and this is an NDTV exclusive. My colleague Pragati Oberoi joins us with the details. Pragati, what are you picking up? Why the forensic audit?
Yes, Hiral, you're absolutely right. The NCGTC has called in a forensic audit of Bandhan Bank's credit guarantee portfolios, which are worth 23,300 crore rupees. Now, the catchword here is forensic audit, because when an organization like NCGTC conducts a forensic audit, it is usually when there are suspicions of malice, like evergreening of loans or creation of fictitious accounts. Now, the whole context of this story lies in a 9th January exchange filing, when Bandhan Bank posted and said that the audit that is being conducted is just for a CGFMU portfolio worth about 1,290 crore rupees. But our findings based on a document that we have reviewed revealed that actually the audit is of the entire portfolio of CGFMU claim and the ECLGS claim, and both these claims total amount to 23,300 crore rupees. Sources have also told us that NCGTC actually conducted a preliminary audit in late 2023. When they found discrepancies, or they were not sure exactly of what happened, that's when they initiated the entire forensic audit of the entire credit guarantee portfolio for the timeline. For example, the CGFMU portfolio is for FY21, and the ECLGS portfolio, which is under the forensic audit, is from March 2020 to June 30th, 2021. That's the catch here. We'll bring you more updates as and when we have them.
Thanks, Pragati, for getting us the details. The stock is under pressure. Very quickly, Ashish, how are you looking at a Bandhan Bank, because we are running slightly over time?
Yeah, already is an underperformer stock if you see compared to other private sector banking peers. And this was a concern even highlighted after the Q2 numbers. The CGM review portfolio are having some issues and audit is going on. The stock has already corrected at that time also, but it's still the stock is under that correction mode. And until unless there is clarity what is going to happen, and post the audit outcome, I think stock will continue to will under the pressure. So I just avoid at this price in my view.
Right, so that's an avoid on the Bandhan Bank. Stay with us. We'll quickly slip into a short break and discuss lots more once we are back on NDTV Profit. Welcome back. LIC, that's a stock to focus on. Stock has crossed 1,000 rupees for the first time ever. 1,028 is what the day's high is in terms of LIC. A lot of investors that are happy with this, Harsh. What are you picking up? What's really working for a LIC to see this again? Market cap crossing 6 lakh crore, and it is, above the IPO price now.
Well, absolutely, Hiral. Cause for cheer, especially for patient investors who waited through all since the IPO till date. And essentially what's happened is it's been a dramatic re-rating with regard to valuations itself. So let me talk a bit about that, because that is going to be the key piece. So you're seeing valuations which have gone from half times price to EV to now almost 1 time price to EV. It's gone from sub 550 all the way to 1,000 plus. And essentially it was valued at even lower than its book or intrinsic value, and therefore what we've seen is a re-rating. But outside of that, even the fundamentals seem to be getting better. They've guided for a better H2, which is H2 FY24 growth number. They're also expecting margins to improve. Margins have already improved quite a bit from sub 10% at the IPO stage all the way now above the 15% mark, and they're stabilizing there. So that is the other positive. So plenty of positives there. New product pipeline launched, more focus on non-par, more profitable products, and all of that is obviously reflecting on the price as well as ought to reflect on valuations as well.
Right, ought to reflect on price and valuations, and whether a re-rating from here on could be on the cards. is anyone's guess. Thank you, Harsh. But very quickly, few stocks that are up in trade is the Power PSU Bank, NHPC, SJVN and Power Grid. And this is on the back of the increase in the budgetary allocations that we've seen. All of them are buzzing in trade. Very quickly, Ashish, what's your view on the Power PSUs and what would you advise investors to do? Because it's already seen a good run up.
Still buy will be my strategy on all the PSU stocks which are into the power segment. Because one thing is clear that whatever the government has increased the budget outlay on this sector, most of it will channelize to NHPCs or SJBN or IREDA, etc. Because now government is focusing more and more on this particular sector, which is renewable energy. So these stocks will go to roof or will go to places, whatever you may call. But all are buy in my view. I think SJVN is very promising after IREDA touching the 5% circuit every day. SJVN maybe soon crossing IREDA in short term. Along with SJVN, I think NHPC, PFC, REC, all are good stock in this particular sector because REC is again a nodal agency for that discuss.
Right. So all Power PSUs are buy at this current point in time. Thank you, Ashish, so much for joining us on the show and sharing your views. We're completely out of time on this edition of Hot Money. Thanks for watching and lots more lined up on the other side. Please stay tuned to NDTV Profit.
Thanks for tuning in to The Portfolio Manager. I'm your host Neeraj Shah and our guest today is Rahul Chadda, founder and CEO of Shikara Investments. He's very well known in the Indian circles and the global circles, and it's a pleasure to have him in our studios. Rahul, great having you. Thanks for taking the time out.
Thanks, Neeraj, for having me here today.
Yeah, and you know, the perspective that you bring from a global level for assessing risks and thereby people trying to figure out what kind of portfolios can one have, while a derivative of this conversation will be very useful. This may not be as much about a portfolio that you are creating, because I believe portfolios will get created under Shikara over a while, but would love to start off by asking you about how do you see, from your vantage point, the optimism around India at a point of time when the EM optimism is not so high, and the growth in various economies. Again, India kind of stands out because the world may not necessarily have the strongest year of growth in 2024.
So, Neeraj, if we look at that framework, see, there is a reason why optimism about India is high, because if we see over the last 4 or 5 years, the policy makers seem to do no wrong. So life is all about making choices, And what we've seen is consistently good right choices made on a macroeconomic front. And I think that kind of explains why we've seen a lot of optimism. This is the fiscal prudence, which the finance minister kind of reiterated yesterday. You look at what happened around COVID, and we got very badly impacted as a country. I mean, there, but still calmer kind of heads prevailed, and the SOPs we gave, the benefits we gave, were limited to the people who really needed it, rather than have huge amount of debt on balance sheet of a country and give handouts to everybody. So I think that was the first mature thought, and the way we handled COVID was good. And coming out of COVID, I mean, the GST collections, and there is a reason why GST collections are so good over the years, because look, the government machinery is implemented GST well. They've gone through multiple iterations. As they say, they've learned fast, they've failed fast, and quickly improved whatever the gaps were there, and that's why we've got the benefits. And those benefits of high GST collections have not been frittered away in short-term gains to win votes, which used to happen in the past, but have been put in gainful infrastructure projects, which have multi-year economic benefits. And I think that's playing out, and that is what globally investors are noticing. And this is happening at a time where we're seeing policy making deteriorate in most parts of the world. It's like, I live in New York and I see what is happening in New York. You look at the US bond yields. Today, when US economy is kind of an red hot, piping hot, US is still running a fiscal deficit of 6%. There's a fair bit of an anger in the society on a large amount of population being left out. Look, I consider myself relatively well off, but when I do a $3,000 monthly outgo for health insurance, and still I pray that I don't fall sick in US and come to India for treatment, there is something wrong. And I think that is something which is being done right by the policymakers in India. They're creating the right framework so that the businessmen, whether it's the local or the global companies, come and invest in the country. And I think that is what they ought to do. Markets can go up and down. Markets can, let's not be too much worried about markets from a near-term perspective. What matters is, are we on the path to become the third largest economy? Are we strengthening our institutions? Are we moving towards becoming a developed nation?
Yeah, most certainly. So tell me, let's kind of divvy up this into two, if you will. And I'd love to know more about Shikara as well. It's an interesting name. Congratulations on that. I really like it. But let's try and think about this from a two perspectives. So I'm presuming your firm is not an India-focused thing. It is focusing on various economies in the world, because you have a global role in the past as well in your previous assignment. So tell us, if you were a portfolio manager sitting globally, as you will be or as you are, and thinking of where to allocate, right? Which economies, which countries to allocate, where would how much of this portfolio would be bent towards, say, a market like India, which is growing well, but which is, for lack of a better word, expensive relative to everything else around, comparable?
Yeah. So let me first kind of talk about Shikara, the genesis. And look, I left my previous firm end September, and there was this time to think about what one wanted to do. And when I came with this name, Shikara, being in New York, most people said, look, it's going to be hard for Americans to pronounce. Why don't you have a mountain, a tree, or some forest together? And my point was, look, I'm very, very proud of my Indian heritage, and I want something which reflects that. So Shikara is a Sanskrit word which stands for peak. And as we know, in markets are going to be tough, and those mountain peaks or those top of the whatever spires of the temples, etc., were always a vantage point to see the approaching enemy. So that's what Shikara stands for, the peak, which is a vantage point for markets, and that's where it is. The way we look at the whole structure is, I, along with some senior colleagues, I'm going to be in New York, but look, every 3 months I'm some part of Asia. Whether it's India, Hong Kong, Korea, etc. So I'm constantly traveling. We will have team in Hong Kong, seasoned professionals, which will give us on-ground sense insights of what's happening in China, Korea, Taiwan, etc. We'll have team in Mumbai. So it's going to be a truly kind of an global asset manager. And the hope is, which is what we were discussing before, that when we grew up, when we came in the industry, the top names in the asset management business globally were of the Western lineage, the European names, the American names. The idea is to build something which every Indian, every Asian is proud of. hopefully, this is just the beginning of the dream, but look, the intentions are good, the values are high. As they say, luck favors the brave.
Yeah, most certainly. So, well, and I'm sure it will turn out well with your experience and with the team that you're talking about. And therefore, I'm trying to peek a bit further into it. How would you, therefore, because you have the option of investing, or because you will have the option of investing across the world, if you will, what would an ideal global portfolio look like if you were doing this right now?
So we would start with the emerging markets, or I would say more specifically Asia fund. So India is a market we've liked. There are times the market goes through this periods of overvaluation. As we sit today, probably that portfolio or exposure to India would be 20-25%. This is a market we like from a medium longer term perspective. Look, there is a bit of a slowdown in the economy. We've seen soft numbers. I think the numbers for next quarter would be also soft. Liquidity is tight. Government capex into the elections is going to slow down. Some of the clamp down on unsecured lending may hurt the economy from a discretionary consumption in the short term, but kind of prevents a bigger bubble from a medium term. So I must congratulate, and I'm fairly appreciative of RBI being such a proactive kind of an institution doing these measures. So India is a market, like the way I said, from a medium term we like. Outside that, I think in the second half there is an opportunity in China. That market's been almost written off by the market participants, and what we are seeing is authorities clearly wake up to the fact that deflation is getting entrenched in the economy, and they've reached that stage where they'll do whatever it takes to revive the economy. And I don't think the market participants have priced that market for that, or are baking in that situation. So I think there is an opportunity which may come in Chinese stocks, and these stocks can rally 30-40%. Though I think one adjustment which is pending in China is the renminbi adjustment. So highly likely that with PBOC focused on increasing domestic liquidity over currency, what we may see over the next 6 months is some slippage in the currency. I won't be surprised if renminbi goes to 8, etc. But I think that is the time to go all in China.